Good morning, friends. Today on 7th of July 2016, we are looking at Nifty, and what we are seeing here is from yesterday's move, it opened with a high and it traded sideways. And today is a Tuesday, so we were expecting market to move on the sideways, but what the what we have learned from the world market is that today they opened with a negative, and they traded with a negative stance. So there was a more chance that at the 9:15 when the Nifty opened, it would have traded to a downward direction, and it did. So that was a pretty reasonable market that it might go from down downwards. So what we have seen, what we can assume that it may trade up to the range that we have created 3 days ago, that this might be a range, and today what we see when it opened, it traded down to this range, and it was trading in the sideways range. So this was a good trade if we have thought that it would happen, the taken a trade. So during this time period after 9:20, so we have seen some good sideways movement. You could say you could have taken some trades here, some trades ups and downs. But what I can say is, if today was a negative day, you wouldn't take trades to trade in a positive day, positive direction, unless you get something positive from world markets, or your bars have started forming a good positive attitude throughout the day. So you shouldn't look for taking a downward upside trade, because it would be much more riskier. You should we should be looking for taking a downward trade and even sideways trade, but from uprange to the next range. So what is happening here is, when you saw this trade happen here, you would have taken an upside trade also here, depending upon how you see the formation of bars. But what we have seen here is, it again, it didn't go very much up from this side. So it was clear to think that there is a good selling pressure here, that traders are selling their good amount of trades in this region. So we should also do the same, because going against the market is not a good strategy. Similarly, looking at that same thing, we could have, once we have seen this and this, and clearly thought that this is a good resistance zone, that this small trade is taking place, we should be taking a downward trade from when it reaches up here again, taking a trade from downside this region. This is overall 5 minutes back, but similar to this region. You could say probably get support here, but you can get a trade from this range to this range. Very small trade, but this is still a trade. And if suppose the market goes down with a momentum, you get an extra effort for that. So this was a good trade from this point to this point. Let's look at 1 minute chart. If you see here, the same thing what I told. You get it? You would have a chance to take this trade from this to this. It would have been a very fast trade. Would not have been much more possible than taking this trade so much, because we thought it would ban negative day trade day. So this was the, see here. It is all more clear that we're finding sellers here, Then again we find sellers here. So it was an opportunity to take trades from downside here and make additions to your trade. Taking a downside, see here also, you could see the orders taking place because if it wasn't good above, then taken an upside wall. So here again it was showing good pressure. So there was good pressure from the downward side. You could have taken any bar here, hoping to reach to this level. And so it did. It was not you see here. We could have taken this trade, but it was not reaching this range again. So there was a good tussle between bears and bulls and bears. So at the end, the bulls gave up here because overall pressure of the market was negative. So you get a good down move, good 20 points move from this point to this point. And if you have placed your order properly with a better target, with a cover order or with taking profits at proper points, you could have even bracket order. You could have taken profits here because at this point of time, how much the movement may take place, you cannot say that you get a good amount of profit here, but this is a very fast movement. There is a very chance that you might miss your target. So having a bracket order is very useful in this situation. So the same thing, even in the future market, you will see you had a big downside bar. Then market was trading sideways action. So you had this upward range. There is a difference between the the levels in spot market and futures market because the premium changes. And the premium also gives us what can happen or what is the pressure today. So based on that, we can also have a better understanding. So we see here good pressure downward here, and again from here. So we could trades or downward trades here. We are taking trade, we get out here. Again taken trades here, looking to get out around here. So we could have reached at this bar only if you have make your first target here. But your target should have been this way level 51, 55. If the order was there, order bracket order would have taken automatic profits here. So you could have got this bit at around here. This bar could have been a very similar downside bar 1, 2, 3, and again up from there. So we are seeing some a good volume here around 3.3 million. So it was a good, and after that we are seeing a good amount of support in this region. See, this bar reached this bar, but as soon as it reached, it again went up all this region. This might be in split second. So your order making would have been, if you are doing any simple order, taking profits would have been difficult. So this seemed to be a good support zone. So now if we look at the spot market and futures market, we can say the market is stabilizing now and would trade around the same range from this range to this range. And if we are thinking of taking a trade now, because we see it is a good support zone, and so it would be very difficult to take a downward trade from here. Again, there is one major thing that we should look at. This range, this 8326 and 8332 or 10 points range, because it's a very big range. It's a daily range, and This was the clear resistance zone for months. So when it reached here this time, so it became a very strong support zone for the buyers who were looking to get beyond this range. So this range is, we can see it is 8.3. Today's low was 8.336. So you see the orders coming here. Okay. Let's look at the weekly chart. You could see this 8328 and 8336. So this is the magic number for today's day. So that's what happened here. Look at this here. 8336 was high. So this daily bar could have been there also. So that this is your good zone, support zone now. Because we are seeing resistance here coming here, here and here. And this movement was from the exit. Britain exit from Europe. So after that we've seen some good positive movement again here. This whole move detail that we have some good positive movement going on. And the formation of today's bar is also indicating that if the market, there is a good possibility the market may reach up to this point and then again it go up. So that 8336 is the same thing. So, so we should avoid taking a down trade from now until unless we see a good downside trade, because this might turn up to a reversal from this whole 2 days range and we have end up again in the same 8400. Currently we are trading at 8343. It is the same 8326. And concern if you consider it to be 8326 and high. So we should now look at how if we are looking to take a trade, we can take trade on both direction, but we have to see the formation of bar and what pressure, what kind of pressure it will form. So that's it for now, and we can have some pretty good movement in the book and be both up or down, depending upon how the European market reacts after continuous 6 days of positive movement. We'll see. Thank you.